Chicago grain prices rise, a turning point for global markets. The global grain market is once again in the spotlight as prices in Chicago have shown a notable upward movement. Soybeans, wheat, and corn futures have all gained ground, reflecting renewed optimism among traders and investors. This price rally comes just ahead of the highly anticipated USDA United States Department of Agriculture report, which is expected to provide fresh insight into global supply and demand trends. Recent price movement: soybean futures, the most actively traded contract, climbed modestly but significantly, reaching $10.26 per bushel. Wheat prices rose about 0.24%, while corn gained nearly 0.30%. This steady upward trend signals growing expectations that prices could strengthen further in the coming weeks. What's driving the rally? The main catalyst is the upcoming USDA report, which will present updated estimates for global production, exports, and stock levels. Analysts widely expect the report to cut production estimates for both soybeans and corn. A downward revision could mean tighter supplies and potentially higher prices in the near future. China's role in the equation: China, the world's largest soybean importer, has recently been sourcing much of its soy needs from South America, reducing demand for U.S. exports. This shift has created uncertainty in the market. However, if U.S. production indeed comes in lower, China may be forced to turn back to U.S. supplies, potentially pushing prices even higher. Potential global implications: rising grain prices do not just impact farmers and traders, they ripple through the entire global economy. Higher grain prices can raise food costs worldwide, potentially driving inflation higher, especially in developing nations. On the flip side, this is good news for American farmers, who may benefit from better returns on their harvests. The bottom line: the recent price rally in Chicago is an important signal for the global grain market. The next few days will be crucial, as the USDA report could set the direction for prices in the weeks ahead. If production estimates are cut, we may see further price increases, creating new opportunities and challenges for farmers, traders, and consumers alike.